Hi, this is Dave with Market Trading Concepts. So this is a supplement to the video that I posted for March the 3rd. Something happened when I was recording the video, so certain parts of the video might be a little bit confusing right in around before when I talk about silver. I thought I recorded my thoughts on gold. So there's kind of a lapse in thinking there. And there's a bit of a disconnect in the video because I was talking about my thoughts on gold before silver. So the references there were a little bit confusing. So I just wanted to add this. I wanted to add this as a supplement to the video just to talk about what I was trying to talk about gold. So what I was explaining about gold then, and I hope I remember all the points, but basically was a situation where I was having. And I mentioned, I thought it was recorded, but I did mention that I'm charting the GLD here. I like to look at the GC, the gold futures, because I think they chart a little bit cleaner. But I'm having problems with my data feed, so I'm going to look at the GLD. So basically what I was saying is here, I had a Darvas squeeze situation on the weekly chart. In the GC, and I used that to take a position in the GLD using call options. So basically what happened was on in the gold futures, the GC, we had a situation where we actually printed a Darvas squeeze long signal in the GC, and the target was potentially around $2,000 per ounce. So I liked the movement, and I liked in my past experience, I've seen a lot of the gold trades just break out and run. And if I tried to buy the pullback, I usually missed it. So I decided to take a trade with that in mind. And when we had the breakout in a minor pullback, I bought the pullback. So for example, I think I bought the pullback on this, it could have been this day here. And what happened was the next day or the day after, I was up 10%, right, I think on this candle here. Now I am I'm looking at the weekly chart, so that's not accurate, but basically what happened was on the daily chart, it was okay. So this makes a lot more sense. So I apologize for the snafu there. But basically what I was looking at, here's the situation right here. Okay, so I had a breakout situation, and I bought, I believe it was on this day where we had a minor pullback. Okay, and in the GC, I think that level was around, is it 1766 or 1768? Something to that effect, just slightly above that. And I don't remember the exact level, but it was somewhere around that level. But it was on this day, and when we came up here, I was up about 10%. I think I was up 10% on this day. So I was pretty happy about that, and I thought, okay, now we're going to be off to the races. So then, fast forward the next day, and Ben Bernanke comes out, or actually that same morning, my bad, that same morning. I was up 10%. Ben Bernanke came out, said a couple of things, don't care exactly what he said, but the market just sold gold off. Okay, the market just sold gold off. So I went from a position of being up 10% in my position to coming all the way down right to my stop level. Now my stop level on options is usually around, for a move like this where I'm expecting a bigger move, I'll usually give the option about 50%. So half the value of the option. And I'm usually looking for at least 50%. So minimum 1-to-1 risk to reward ratio. So the situation here was, when it came down, I just about triggered my stop level. But what I was looking at was, in order for this potential uptrend, early stage uptrend, on the weekly chart to stay in place, it's a little bit more advanced on the daily chart, but it's not, a very what's the word I'm looking for here? It's not a very mature uptrend, I guess is the best word, a mature uptrend. So it was kind of early stage stuff, and this is what can happen in early stage stuff. So when we hit the 21 EMA on the weekly chart, I was watching it very closely to see if it was going to hold that level. So what it did was, as you can see here, it came in. Let me just zoom this in. So it actually came into this 21 period EMA, and what it did is, you can see this candle basically probed through it, but it ultimately held on the weekly candle. And you can see now we didn't get a big bounce, and that's kind of a cautionary sign. But you can see that we had, a little bit of accumulation in here, and it held that level. So basically what I'm looking at is, if we get a move below this 21 period exponential moving average on the weekly chart, I'm looking to just take a stop out no matter where I'm at in the value of my option. I'm looking at this as kind of the last bastion of support, the last, the line in the sand, that if it closes down below here, we're pretty much done. On the daily chart, I'm actually looking to see if, we hold these levels and we move back up to here. I might even look to cut the position, or if we actually get a strong close above it and hold it and start moving higher, I'll keep it. So this is a situation now where I'm looking to manage my position. I'm looking to manage the stop to see, is it going to hold the support and move higher, or, are we done? If we roll back over to the downside, I'm going to have to cut the position loose because it's outside of my risk parameters. It's more than I'm willing to risk on the trade. So incorporating, those thoughts into the next topic that was in the video, which was silver. In the video, I talk about how silver, looking at the SLV, because I was having trouble as well with the silver futures feed. I'm not sure why. Probably have to restart the platform. But silver held up a little bit stronger, and that's pretty much where I left off and where it picks up in the other video. It held the 21 EMA. So apologize for the disconnect there in terms of the logic of the video. Just insert this right in front of where I talk about silver in the video. Thanks again, and have a great weekend.